Well, it's Saturday, March 27th, and I believe this is our 29th Saturday meeting. So if you're new, then you've obviously missed all the other Saturday meetings. And if you wanted to, if you ever want to look at any of the Saturday meetings, you simply have to log into the website and then go to the members area menu up top, and then to the asymmetric, I think it's just called archived videos. And there you can see all of our Saturday meetings, and then plus any other videos that I do intra-week. I add them all there and archive them there. So you never have to really miss anything. Today, first of all, I wanted to talk a little bit about this past week and some of the things that are going on. And as you know, I have 3 services. You may not know that, but most of you probably know it. There are 3 services. There's the original service, which was the advisor newsletter, which is going very strong. And if you're not a member of that, and if you would like to join something, an investing newsletter, all I can tell you is that after 1 year's performance, on average, all of our picks are up over 350%, probably closer to 400% now with some of the recent gains on some of the picks. So if that's the type of performance that you're interested in, then for a very, very modest yearly fee, you can participate in that, where I invest in natural resources and mergers and acquisitions of companies that are going through boom and bust cycles. So it's very cool. All right, we got to allow Alex in here. And so again, the advisor is the original service. The second service that emerged after the advisor, just to give you a little history, last year when the pandemic hit, mergers and acquisitions and natural resource companies basically stopped because most people that were in mining operations and so forth, well, they basically shut down. And so I started, and there wasn't a lot to do for several months. So I started another service called 3D Options, which is, and it was really originally intended just to have the advisors, give them something to do, to start building knowledge on trading options in a swing trading type of fashion and start building up a little bit of capital. But it turned into a service. And so I'm sure a lot of you are part of that as well. We have to admit VM here. And that's gone very, very well. Although there was a period when I got sick over December and January where it probably wasn't so great because I was suffering from brain fog with the COVID disease. But other than that, it's been fantastic. And then most recently, about 2 months ago, I started and this is kind of anathema or antithetical to everything that I ever have taught, being against basically short-term trading. And what I mean by ultimate short-term trading is things like day trading. But I saw an edge, a real edge, and I wanted to do something better than what everybody else was doing, called zero DTE options trading, which is a kind of day trading with options on the S&P. And we actually had a fantastic week with, now you get 3 opportunities every week, Monday, Wednesday, and Friday. We had a winning Monday, we had a losing Wednesday, and we had a winning Friday where I think a lot of people actually went to max profit. And max profit is really actually spectacular. It's a little bit like a Hail Mary pass in the trading. But if you stuck it through to the end of the day, you would have made as much as 1,000% on the risk that you put up. So that's pretty cool. So if you're interested in that, and you want to join that, let me know. I think you would really enjoy that service. Like I said, I do it different than everybody else out there that I've seen, at least. As a matter of fact, it's not just different. I do it the exact opposite way that everybody else does. Everybody else is not, well, they are doing asymmetric, but they're doing it in the wrong direction. They're doing, you know, small profits for huge risks, where I'm doing super small risk with huge potential profits, which seems to make a lot of sense to me. Now, one of the things that this is going to lead into, what this particular presentation is about, is, how you can do that and maintain a fairly high win rate. So in other words, how can you have a high win rate and huge potential profits, which are usually inversely proportional? Usually you have a very high win percentage and very, very small profits, where in this particular service, and I'm trying to figure out ways to incorporate the same methodology into 3D and asymmetric advisor, because that's what it's all about. I mean, asymmetric advisor has also been one of those services where, and that's where the whole name came from, where we invest a small amount of money and we're looking for 300, 500, 1,000% return, or even 10,000% return. And eventually, I think some of our plays will hit that. The thing that makes all of these services, I think, viable, besides the strategy is always important, but being able to follow the strategy and be disciplined and all that, those are all things. And, having the execution acumen, knowing your platform, all of that stuff is, I think, just as important as the strategy, leading up to actually the execution. And that's what I wanted to talk about today. And whether it's the 0 DTE or 3D options or the asymmetric, all of them require a tremendous amount of upfront work. Now, I mostly do that right now, well, at least for new members. But as members start maturing with the service, they start seeing what goes into actually leading up to a day of trading, or how to pick a trade, or what goes into that. And there's a lot of upfront work that makes it all happen. Well, to give you an example on, let's see if I can, I have a presentation here and I have a little graphic that kind of shows this. I'm going to start with the asymmetric advisor. And what I'm going to show is a chart. Let's see here. And then I just go and I share the screen. So I'm assuming everybody can see that right now, or not. Can you see that? Or, oh, I know. I think I have to share that through a different means. Let me do it a different way.
We can see it.
Oh, yeah. I'm going to share it a different way, though, which I think is more cool because I'm going to use the OBS feature. Can you see it now? Yeah, I know you can see it now because I can see it. What I did was I just shared it a completely different way through my OBS software. I know that doesn't mean anything to you, but to me, I think that's totally cool. All right. So this is the actual upfront work that I do when I'm picking a natural resource company to invest in. And it's a long process. What I'm looking for in general, the general strategy is to find small companies, or companies that are starting up. Maybe they're exploratories. Maybe it's a new company starting up from, and the key to all of this is really knowing the people who are involved in this, right? So the very first thing, and it does look like a big circle, and there's entry points in there. There can be a lot of entry points depending on whether or not I already know about the company, but it usually starts with the upper right where it says a reference check for the people involved. The way you actually make money in this industry, and in most industries, even in, any kind of investment, is that you follow the management as opposed to the technology. Technology is always secondary. There's always going to be new technology. But unless you have great management, people who are winners at what they do, and sometimes you don't know they're winners yet because they might be new, but it's usually a lot easier when you find somebody that has done something over and over again. And this is the case, certainly the case inside of natural resource investing and mining and exploratory companies and producing companies and junior miners and so forth. And there are other types of companies that we invest in too, that you find the people that have done it 1, 2, 4, 5, 10 times and have, taken small companies and blown them up into, 10 million, 100 million, billion-dollar companies. And if they start up something new, there's a very high likelihood that whatever they're starting up, it's probably going to be a success if they've proven to do it over and over again. So you start there, you validate the project, analyze the business case of what they're doing. Sometimes the marketing plan is inconsequential for what they're doing because they already have access to all the right people. What is the catalyst? Why are they doing it? And so forth. So all of this stuff are things that I go through, and I do intense research on these companies before I get to the point where I recommend something to the members, and then I put it out there, and then we invest in it. And as far as they know, Ernie's just like, he's got like this crystal ball or something, and he just picks something out of the hat and throws it in there. But it's actually the confirmation from many other people that are in the industry. I subscribe to literally tens of thousands of dollars of newsletters and special information groups, mastermind groups. And I go to conferences. My client has sent me around the world to different places to attend some of these conferences and so forth. And then I put all this information, which you guys don't have to pay for, and put it in here, and then serve it up to you for a ridiculously low price, and make picks that you can literally make life-changing investments in. So I'm hoping that service at some point really blows up and turns into something big, because and then I can start charging much more money. But I won't be charging you guys that. You'll always pay at the same price. But in any event, just to give you an idea of what goes into just that service. Now, with 3D options, there's a lot of that. I mean, it's not as intense because we're not living with these companies for a long time. We're only living with them for a few days, right? I mean, or maybe a week or 2 weeks because it's a swing trade. So what type of preparation do you do for something like that? Well, first of all, you need to, you can't just have, like a dartboard with thousands of stocks that are out there and then decide that, well, today I'm going to pick from the 7,000 stocks available to me and try this or that, right? And do they fit my criteria? That simply doesn't work. And let me get back to the big head here. So with the 3D options service, the very first thing, and this is something that I've encouraged everybody to do, is I build a watch list, or I build a list of I should call it a short list as opposed to a watch list, a short list of companies that I'm going to focus on. And those are the companies that will trade and look to retrade over and over again. And for the most part, that's been very successful. And we've made money on all of them, except for maybe 1 or 2 out of maybe 30, maybe 20, well, maybe 25 companies. And then I try to pare it down to a shorter list so that we can just focus on those. And so that then we can become more familiar, not only with those trades, but those specific companies and the business that they're in, and all the other economic activity that's going around, and sector activity and market activity that's going around that might influence them, so that we can make better decisions. And then, of course, we follow the 3D option sort of asymmetric way of trading and try to capture those stocks at the most opportune time, and then apply that strategy. Now, actually picking that watch list is, a whole science in of itself. And then there's kind of a life cycle that I go through in making sure that the members of that list should stay on that list. And if you go into the pinned, if you're in part of that group and you go into the pinned thing up the top of the Discord, you'll see things like the life cycle that I go through in terms of vetting these on a periodic basis and deciding whether or not they stay in that watch list. All right, so then we have the zero DTE. Now, that's much more concentrated. Instead of, lots of managers, lots of companies to pick from, lots of industries, et cetera, it's only one thing, and that's the S&P. There was one other tool that I haven't talked about yet, but I'll talk about that in conjunction with the zero DTE, and it also applies to the 3D options. So one of the things that I do is I do a fair amount of analysis. Now, with a short-term trade, one day, that's what the zero DTE is all about. There's 0 days to expiration. You essentially have the very last day of expiration to make the trade. And there's a number of reasons why you do this. And the biggest reason is because the premium that is involved in the options play is expiring at its quickest rate on that last day. Actually, the last few days, it is exponentially declining, and depending on market volatility, the amount of premium that you start with, say, 24 hours before expiration hits, could vary widely, and it could pump up like if volatility pumps up and present unbelievable opportunities. And just like in the 3D options case, one of the things that gives us an edge is that implied volatility or future looking volatility is almost always overstated. And so that's the same case even in the zero DTE world. So the way we prepare for that is, besides just knowing the index and where it is in terms of its market structure, which we look at, and we also do this in the 3D options using volume profile and linear regression. The linear regression basically tells us, gives us a momentum story, and it's using least squared methods of statistical measure of direction and magnitude of the move. We can often tell whether or not something has hit a resistance or support point and is about to turn, because those are the areas of inflection that are most likely for us to take a trade or decide where something's going to move and create an option strategy that can take advantage of that. So volume profile comes into play in that volume is the principal thing that will tell you whether or not something has support or resistance through the expression of the market, where they find value and where they don't find value. And you've probably seen me use volume profile and all these things, and I'm looking at that, and I'm trying to look at the big picture of the stock or the index and where it sits on that volume profile and what type of pattern it has, and whether the linear regression is telling me that it's sort of hit a bottom and it's starting to turn up. And then, that's like a trigger to pounce on that and do something. And that's exactly what happened with yesterday's trade, for instance. But that pounce didn't happen until the night before, right? And that's one of the that's one of the differences that I do in zero DT that's very different from what other people do. Most people are trading the SPX, the index, which is nothing more than a calculated thing. It's a calculated tool. It's not actual stocks, moving up and down. And so because of that, it doesn't have any volume associated with it. And on top of that, it only opens up when the market opens up, the cash market at 9:30 in the morning and then closes at 4. So when you try to do some analysis on it, it's very difficult. So what I do is I trade the futures, which has all the same properties in terms of the opportunity of trading 3 times a week and having 3 expiration dates a week. Um, and and because of that, I can prepare for that moment, either entering a position much earlier and gaining much more premium, because if you entered a position, say 12 hours before the market opened, the cash market, that's 12 hours where, and as you know, in options, time is premium. I mean, premium and time have a direct relationship. So 12 hours is a lot more premium that you can sell or take advantage of in your position. And being able to do that with futures is a huge advantage that you have over trading the index. And so let's see. There was one question. Have I heard of trends? It could be a big year for energy. Yes, of course. Trends are a big factor in everything that you look at. In general, that's sort of like the underlying thing. You always look for. You would rather trade with things that are in a big trend, a major macro trend, because every trade that you take, if you take it in the direction of the trend, your chances of success are, I'm not going to say magnitudes higher, but I mean, there's a certain percentage of extra edge that you have by trading with the trend, which is obviously huge. Now, but when you said something about for energy, for instance, we were just having a conversation in the asymmetric or the advisor talk channel, and talking about how oil might be something that we should be looking at right now. What are some good oil picks? And I'm thinking from a macro point of view. When I say macro, I mean big picture. There's oil is starting to go out of favor for a lot of people. Now, whether or not you believe it or not doesn't matter. It doesn't matter what you believe. It really doesn't. It matters what is. And there are huge political pressures and cultural pressures and other things that are forcing many companies now to adopt a new thing called ESG. Now, ESG stands for environmental, sustainable, and governance, right? So this sort of, and that encapsulates a lot of things, by the way, but essentially it means, green energy and climate change and all this other crap that, we all think is kind of overblown, not necessarily not real, just kind of used for political purposes or whatever, but it doesn't matter. What matters is that the biggest financiers in the world are now dumping literally trillions of dollars into ESG and companies that support ESG initiatives. In other words, green energy and sustainable and all this other stuff. That's where the world is going. So if someone's coming to me and saying, "Hey, Ernie, why don't we start looking at investments for oil and coal?" And I'm saying, well, while there may be some opportunities there, that's not where the money's going. I'd rather be at the ground floor of where something's going, so that in 10 years we can turn this into an asymmetric trade. So everything that I'm talking about here is just to highlight to you the importance of preparation, right? Absolute preparation on everything that you're doing in each of these different services. I mean, in my case, and just trying to give you a flavor for what, I'm trying to express to the members of those services, what we have to do. And the advisory group, that's coming along really great. And a lot of those people from the advisor and the 3D options group, so they understand that. And some of them are spilling over into the 0DTE. So I'm getting, some churn and rehashing of the same principles, and they're working their way through. But there are a lot of members, and some of you that are only in one of those groups. You didn't start with the original. You might eventually go to one of those other groups. That would be great. But that's the same philosophy applies throughout all three. And that is that the preparation part is as important as the alerts. The alerts is ultimately what people think that the service is all about. And I'm here to tell you that the alerts are not what the service is about at all. All the alerts are is an expression of the work that's being done, and sort of like a prototype or an example of what all that work produces. Obviously, the actual trades, they make a difference. But what I'm saying is that it really is the upfront work that makes those alerts happen. And any of you should be able to take and learn from the preparation part and the planning part, and then be able to apply it yourself, and then bring new opportunities to the group or on your own that follow within that kind of same process and philosophy and methodology. So that's really the message that I wanted to convey here, that is really what these services are about. These services are not about just supplying ideas, that you can trade, because any monkey can trade a pick, right? If you don't know why you're trading it, what the edges that you have with that trade, how that trade actually came to be, what are all the underlying factors that made that trade attractive, then you're at a severe disadvantage. And then equally, if you don't know your platform, because there can be a lot of things that could go wrong that have nothing to do with the research or the trade or the alert or anything like that, that strictly have to do with the technology, your internet connection, your broker, the specific platform that you're on, whether or not you know how to execute this type of trading type or that type of trading type. That if you don't know all that stuff cold, that's also another thing that you need to get prepared for. And in that preparation, that is all, these are all things that are factors that lead up, to your success. Then the other thing, there are two parts to this. That's all the preparation part, right? The next part that I think is just about as important, and it's more strategical than, and maybe, it's what bridges, I guess, the methodology to the strategy. And that is the planning part, because once you've done all the preparation and made a decision, and then you're about to take it, the dive into something, that's not where it ends. As a matter of fact, that's where it begins. And then after that point, there is planning, right? And the planning is about understanding, well, what could possibly happen if you did get into this position and you committed some of your capital. What could happen? What happens if it shoots straight up, or goes straight down against you, or doesn't do anything at all? Those are basically the three possibilities of anything that could happen. Or what happens if macroeconomic conditions change, or a company that we're in, has earnings, or there's a new report that comes out, or, any number of things could happen. On the zero DTE, that is more a slave to economic conditions and economic reports. It's one of the reasons why before each zero DTE session, I list all the economic reports that are coming out that day, right? Or whether or not the Fed president is speaking, or Janet Yellen, or if there's a bond auction happening that day, or if the CPI or the PPI or the employment report is out, or the employment status report. All these things will can affect the market in the short term and in maybe the near term as well. And so when you get into that trade, sometimes, you get into that trade and you don't know what's going to happen. Maybe those things don't happen until after you're in the trade. Well, what do you do if that event, that binary event, has a negative or a positive impact to your trade? Now, then from that, you develop a plan and scenarios. And I do the same thing with volume profile. In volume profile, not only do I develop where I think price is going to go, but I develop 2 or 3 different scenarios, excuse me, about where price is likely to go. And then based on trend, and then the size of the volume nodes, and then the structure and the patterns around it, I try to come up with 2 or 3 different scenarios about where I think price can go, and then plot it out, and then make a plan for what I'll do under one of those circumstances. I'll make big picture plans, I'll make medium-term picture plans, and I'll make short-term picture plans. And then have an idea of what to do in the event of something. Now with 0DTE, because it's such a short time frame, it's harder to do that, because in the shorter the time frame, this has always been the reason why I've been not a big proponent of day trading, is that there's more noise than there is signal, right? And so it's difficult to tell the difference between what's noise and what's signal. So sometimes you just have to put on something that will basically be like, hey, I'm willing to, and this is really the way the whole my strategy in 0DTE, I think, has evolved and is different from everybody else, where everybody else is trying to treat 0DTE situations as just a premium collection type of thing, with a very volatile instrument underneath the S&P. And they think that the way they can capture all that premium is by casting a huge wide net of a very high probability trade, and then hope that price stays inside of there, right? That's basically their strategy. What I found was that, well, a good portion of the time, even that huge, wide, high probability net doesn't capture it. And a lot of times it certainly doesn't capture it and goes outside there. And outside of that net is huge risk. So they could lose a trade that could literally wipe out 2 months worth of profits. So what I decided was that, well, you can't make those decisions up front. You can't come up, there's no one strategy that works. But what we do know is that there's a lot of volatility, and price is doing this, or it's generally doing this, or something, it's moving. So my idea was then to employ a different strategy, what I call probability of touch. And it's not my term. This is a term of art that's used in options trading. What is the probability of price touching a particular point on the scale of up and down, all right? Based on, how volatile the market is, how volatile it's been in the past few days, and what we project it to be in the next few days. And so then what I do is I say, okay, I will still do that big tent, that premium collection thing, but I'm going to put it either way out of the money or way in the money, away from us. And if it goes towards there's a value that increases almost geometrically towards that ultimate goal, where you can make money on the short term if you're volatile enough. And then if you're really lucky, it will go all the way, like yesterday, into the profitable area, or like Monday, and you could make a lot more money. So it's a very, that's the planning. What do you do in the short term, or a small probability of touch, whether it makes 100% on your risk capital, or 200%, or 500%, or the possibility of making 1,000%. Imagine that, making 1,000% on the risk that you take in a single day. And that's what a lot of people achieved yesterday. But all because they have the strategy, all while you're only risking a tiny little bit of money. There are other benefits, to try to figure out this and do the preparation up front, and knowing your strategy, knowing your edge, and knowing what you're going to do under different circumstances, being prepared. And that is that you start developing a level of confidence and comfort, right? But you don't ever want to develop enough, so much comfort that you feel like, blasé about it. That's not what I mean. What I mean is that there is no panic in case you are hit with one of these binary, unexpected black swan or mini black swan events. You know what to do, or that you don't have to do anything because it's inconsequential, or what the plan is up front. And when you trade with confidence, you trade better. There's no other way to put it. It's like doing anything. When you're confident at something, when you know what to do under every circumstance, when you can almost react out of muscle memory, you're going to be more successful. When you're prepared, you become luckier. And that is an absolute truth. Some people look at traders that are winning all the time. They say, he's so lucky. Well, that luck is the product of being prepared and having a plan, and then having supreme confidence in what they're doing. And so the hardest part for me is trying to express that's what this service is all about, is for you to realize that getting to that point, first of all, is not a trivial amount of work. There's work involved. And that's one of the reasons why I put the upfront, relatively low fee, to get in one of these services, is to keep you around for a year, even though it's not that much money. Some people will blow it off, but to keep you around long enough that you start realizing that that's what this is all about, that preparation and planning and developing execution skills and your confidence in what you're doing and knowing your edge is the key to making money in trading. One of my mentors, my first mentor, told me that, and this is what really sort of brought this all together for me several years back, was that trading is the hardest way to make easy money. Right. And so what he's implying there is that it takes a tremendous amount of upfront work to get to that point where you're totally confident in what you're doing and you're a skilled executioner, that after a while it becomes easy to make money. And I'm not saying I'm there yet. You're never really there. Some people get there, some people are just lucky. And that's just a matter of, that's the world, right? So you could have 1,000 people, right, that are all flipping coins, and there will be, after 10 coin flips of all those 1,000 people, there will be one person left that flipped heads every single time. And that's just a fact of life, right? But you could also be the other person that did it 9 times, but got there because you knew more than everybody else, enough information to be able to pick which way the coin was going to flip. So there is, definitely an element of luck. It's the same way, I play pool, and pool is probably one of the most difficult games to play at the highest level, because there are so many variables involved and so much skill that is required. However, and the same people rise to the top, but even those elite players still are subject to a fair amount of randomness and luck. Either the balls roll their way sometimes, or they don't, or something just happens that they can't control. So the way you get up to that elite though, I mean, that's the area, the closer that you can get to that level of confidence in what you're doing is what is going to produce more good luck for you, or what other people perceive as good luck, which is not, which is really a product of the time and preparation and planning that you put into it. So that's my lecture for today. I don't know if anybody has any questions, and I don't know if I spent too long belaboring that point. Any comments on what I've said? You can either unmute yourself and talk, or you can type in something. It's anything. This always happens. Until one person decides to put something in, and then everybody starts rolling in. All right. There's a video that you should look up on the internet. I wish I had it right at the tip of my fingers. And this is really what what group dynamics are all about. And it's a concert, and it's an outdoor concert, and there's a bunch of kids that are sitting on the side of a hill listening to the concert, and the band is way down, below, maybe 300-400 feet away. And this one kid, he gets up, and they're all just sort of lounging around and smoking weed and drinking beers or whatever they're doing. And this one kid gets up and starts doing this nonsensical dance, kind of like, I don't know if you ever watched Seinfeld, but when Elaine did her dance and it was so bizarre and it was hard to look at, he said, this person doesn't know how to dance. But that's the kind of dance this guy was doing. And he was just sort of flapping his arms around and just feeling the joy of the moment. And he was doing it for several minutes. Then all of a sudden, and everyone's looking at him like, this guy is a tard, right? And then all of a sudden, another guy joins him and starts like mimicking his same moves. And then very soon after that, a third person came in, and then a fourth, and then a fifth, and then 10 more, and then 20 more. And then before you knew it, within a very short period of time, there were 1,000 people jumping up and down, mimicking this guy. Manosha's saying, you may want to touch on the time commitment for 0DTE. I couldn't commit it wasn't an option for me. Yeah, that's true. Well, I mean, look, if it's 0DTE, then, it's a day trade. Now, in general, we're not trading all day. We put a position in, and here's the cool thing about 0DT. Unlike most day trading, it's not like you have to be glued to the monitor all day, because first of all, you're only risking a small amount of money. Secondly, we generally put a position in early on, then it's just a matter of monitoring it and deciding when to get out. And you could, in fact, apply a strategy where you don't just take one position, maybe you take 3 positions, and maybe you get out the first 2 positions early and make a little bit of profit, and then let the third one ride in case it goes all the way to expiration and makes the big thing. And if it loses, it's like, I don't care. So from a point of view of day trading, I think 0DTE, because of the methodology, it is not as intense as, say, sitting down in front of the computer and trying to pick off patterns all day, which is mind-boggling, because first of all, I believe that it's impossible to do that. I had a conflict exactly 3 to 4 p.m. every day, so that was an issue. Like I said, if generally you want to get out of the trade early, right, and make 100, 200%, that's when 80% of the trades actually happen. Around 3 to 4, that's right when the market's closing. So by then it shouldn't even matter to you, right, when to get out. Just, if you are, like I said, there's a general strategy that I've been talking about with some of the members that, take 3 positions or 2 positions, have one where you try in the beginning part of the day, try to get your best position and then let the other one just run. Because the first one that you made profit on, you might make 100 or 200% of the risk. The second one has the same kind of risk, but so if it fails, right, the worst that you're going to do is break even in most cases. If it goes all the way to expiration, the best you're going to do is make 1,000%. So that's a possibility. I'm just laying that out there. So I would say that in that, quite frankly, had I on Monday and Friday had not even paid attention to that 3 to 4 hour time frame, I would have made a max profit on more of my trades. Instead, I tried to manage it and missed out on some big profits. Chris says, you thinking about doing some videos, Zoom meetings like this, specifically for Asymmetric Advisor anytime soon? Yeah, absolutely. There hasn't been a lot to do recently, but there are new opportunities that are coming up. I mean, we did have, the IPO that we did, and I think that that's going to be a big winner sometime down the road. It might take a year or two, but I think that's going to be a huge winner. But there's going to be a lot to talk about in terms of ESG. And I mentioned that earlier, environmental, sustainable, and governance, that and a lot of these new companies that are emerging, carbon credits and other things that I'll be talking about. If there is something specific that you would like me to do, I would be happy to do that too. So all you have to do is just ask. But, we talk about stuff all the time in the Discord. Any other questions? Is it possible to switch from 3D options to asymmetric advisors? Any concession in dues? Why not just add it? They're two separate services. To switch, I don't know. You could stop the alerts and then just participate in the education and then pick up the advisor. I don't want to sit here and try to like nitpick, over switching and money and stuff like this. These services, for the value that you're getting, I'm going to just be straight with you. The value that you're getting, it's unfreaking believable how cheap they are. And I'm not trying to sound arrogant here. This is just plain fact. That if you had to go to another service, you'd be paying 10 times as much for the level of service that you get and the direct interaction. There is no other service, first of all, that has the kind of direct interaction and support that I provide, period, end of story. And they certainly, and if there is, they certainly don't come in at this price. So I would say, if money is an issue, then I don't know what to tell you. But the picks that have been made on the asymmetric advisor, any one of the dozen to 15 picks that have been made would have paid for multiple years of the subscription price. Thanks, Chris. Yeah. So if you're worried about price, I mean, that's mind blowing when you consider the value that you'd be getting. And that's why I don't do trials. I don't do refunds, because what I'm offering for a whole year is what most people are offering for a single hour of time. Right. And I'm talking about that from experience, because I did that, as a profession, where I would be charging upwards of $300 to $400 an hour for my time to coach executives in Fortune 50s and Fortune 100s, right? That's what my time was worth to them. And so what I'm telling you, and like, again, I'm not trying to sound arrogant. I'm just telling you what the truth is. I'm giving you my experience of 40 years that I used to charge that price that you pay for an entire year. That was my minimal price to charge executives for an hour. So you got to decide whether or not you think it's worth it. I wasn't trying to beat up on you. I'm just trying to make a point, and I just want people to appreciate, what goes into this, and really everything that this presentation was about, what goes into it, and what I'm trying to, pass on to you so that you will start doing a lot of these things. And actually, in you doing these things too, mimicking what I'm doing, will provide tremendous value back to the group, and it will all just kind of snowball. That's really what I'm after. All right. Any more questions? We're coming up right up to about an hour. If there's another question, I'd be happy to answer it. Cool. Well, I want to thank you very much for taking some time out to come and here on a Saturday, and I hope you have a great rest of the weekend. For those zero DTE people, zero DTE actually starts at 6 p.m. on Sunday evening, believe it or not. So, well, that's when I'll start be looking or entertaining trades. So they can come anywhere from 6 to, I guess, 12 o'clock the next day. So we'll talk to you later. Thank you.